This report is brought to you by the Richmond Club, where investors and high-growth companies meet.
My guest is Bill Boberg, who is President and CEO of UR Energy. Bill, welcome to the program.
Thanks, Greg. Glad to be here.
Now, UR focuses on uranium, correct?
That's correct. Yep.
And you're not too far away from going into production. How big of a deposit do you have?
At our Lost Creek deposit in Wyoming, we've got around 11 million pounds of 43101 resource that's defined at this point in time, and we're with the drilling that we've done, we're seeing the potential for very significant increase in our resource base.
Okay. So how far away from production are you?
We submitted at the end of October of this year our application to the U.S. Nuclear Regulatory Commission for the primary license that we need to be able to mine uranium. That will be an 18-month permit review process. We expect to receive our permit in early 2009 and to start the mining operation and production in late 2009. We will be one of the first companies in the U.S. of the new batch to get into production.
Okay, and there's like, what, 400 or 500 uranium companies out there?
There's a number of different things that we've seen, but there may be upwards of 500 uranium companies that are touting their ability to make discoveries and get into production, yes.
But they're much further behind the production curve.
The majority of them are much further behind us. The majority of them don't have the experienced staff that we have. We've got well over 300 years of direct uranium experience on staff, well over 1,000 years of total experience on staff from a mining experience standpoint for making the exploration programs move forward, make discoveries, do development work, and actually produce the projects. We have the geologists and engineers on staff with the experience in the uranium sector to make it work.
Now, what sort of production levels do you expect in your first couple of years of production, and what sort of mine life are you looking at?
On our Lost Creek deposit, that we're planning it to be a 1 million pound a year operation. We're building a plant there that will be capable of producing 2 million pounds a year. We'll be starting production in late 2009. We'll achieve full production probably later in 2010. And we'll be producing about 1 million pounds per year from that project. We intend on bringing our second project on stream, our Lost Creek project, about 2 years after that, and it will be producing an additional 1 million pounds per year when it would ramp up to full production as well.
Okay, so 1 million pounds of production is what, about 100 million-ish?
That would be, that would probably be in the 90 to 100 million dollars per year of total production revenue that would be coming out of the mine, given current prices, and we expect those prices to hold pretty constant or maybe increase somewhat by the time that we would be producing.
Now, what do you see out of that after you pay for your cost of production? Would you see half, three-quarters?
Yeah, our production cost is, our feasibility study is suggesting our production cost to be around $25 a pound. So we would be netting out of the operation somewhere between $50 and $75 million per year.
Okay, and then with the, after what, year 2 or 3, potentially doubling that production rate?
Yeah, once we would be bringing on our additional project, our Lost Creek project, yes, we would be expecting that would probably be doubling. And then we're definitely working on our own internal pipeline to production, which we would expect by that time as well, that we would be having additional projects that we will have brought along, so that every 2 to 3 years we'd be expecting to bring a new project into production then.
Okay. Now, just trying to get a sense of value on the first project. If you're talking about 75 million after your cost of production, 10 times earnings, conservative number, $750 million market cap. Where are you now? And just maybe you could tell us about that. What is your market cap?
Currently we're probably, I think today we're around $3.60 share. We've got 92 million shares outstanding, somewhere in the range of about a $350 million market cap. Our share price has been as high earlier this year as $5.45. we feel that given our proximity to getting into production, that we should be in a position of having a market capitalization of somewhere in the range of $500 to $600 million. By the time we get into production, it should be somewhat greater than that.
Okay. So the strategy is just to continue to, every couple of years, add another mine into production?
That is correct. That we've got within the general vicinity of where we're building our plant and our first mine, we've got 9 other projects that we're working on in that area. Some of them are very early stage exploration projects. Some are ones that have already got a few thousand drill holes on them, that have got some resource identified that we need to get a better handle on and to get it in a position to see what we might be able to do from a production standpoint with them.
Bill,
so we have a number of projects available to work to move forward.
Bill, we're out of time now. Could you give us your stock symbol, please?
Yes, our stock symbol is URE on the Toronto Exchange.
Bill, thanks for joining us. My guest has been Bill Boberg, who is President and CEO of UR Energy. For In the Spot, I'm Greg Beckett.
This report is brought to you by the Richmond Club, where investors and high-growth companies meet.